Hello everyone, I'm here today with Mr. Maulik Kadakia, a rising financial professional at Cantor-Fitzgerald, an investment bank in New York City. I've known Mr. Kadakia since high school and I'm very happy to have him on the show today, especially given the short notice. Thanks again for coming on the show.
Thank you for having me. It's a very broad profession. It involves things like the stock market, the bond market, commodities, etc., etc. My role is specifically within investment banking is mergers and acquisitions. It involves consulting companies on whether or not a company A should buy company B. Most of you know the name JP Morgan. JP Morgan has two sides to it: the investment bank as well as the commercial bank to it. The commercial bank is known as Chase. Some of you might have bank accounts there, and the investment bank is known as the JP Morgan side or the asset management side. Banking on the commercial side is opening up a checking account, a savings account, giving you a line of credit, or being a place where you can store your money, your paychecks, anything of that nature. Investment bank focuses more on the managing your financial planning, which we'll get into a little later. But the investment bank focuses on how to grow one's wealth in order to prepare themselves for retirement and or other ventures. As I mentioned, financial planning is a major role for one of the investment banks because it helps individuals prepare for their retirement or prepare themselves in times where they might need money whereby a paycheck is not enough. It would involve getting your bachelor's degree, usually within finance or accounting or economics, but it could range from anywhere from history to anthropology. Other requirements involve getting your certifications, but that's later on once you start your career and once you graduate college. Looking at markets around the world, which include Europe and Asia, and it usually is a precursor to how the U.S. markets are doing. And when I say markets, I mean the stock markets as well as the bond markets. Once that is done, I look at the companies that we're looking to acquire and see if there's any news that has come out on them, and if so, advise the buyer on said news. If not, then continue with the analysis that I have to do on the company that we're looking to acquire. Stocks are usually when you deal with companies. At the end of the day, you essentially own a piece of the company. Whereas bonds are more, it's used mainly by governments or, they're used by companies as well, but on a grand scale they're used mainly by governments as well as state authorities. So for example, let's say the city of Philadelphia wants to build a highway, or they want to change or fix the I-95. They issue a bond. The bondholders lend money to the state government, and any proceeds that they get from running the I-95, which may be tolls or taxes, they go to the bondholders and they get a return on the investment. So let's say I put in $100, I get $102 back, and that's $2 of the return on my investment. Any given day, I can range from basic algebra to statistical regression. In my college career, I did Calculus 1, Calculus 2, Statistics 1, Statistics 2, and Operations Management. And when I say basic math, that could involve adding, subtracting. But when it comes to statistical regression, I look at patterns within a firm or within the stock markets and analyze how they'll impact future investments and or future acquisitions that our firm makes. Now, I'll run through a stock that Mr. Somawar and I looked at together. Now, if you notice, this stock has a pattern that goes up within a 1 year period. It went from being at $22 to being at $10.85. As you can see, the stock's movement has been steadily declining, which tells me that I wouldn't advise any of my clients to invest money into this stock just because the progression is going through such that one day the stock's value is going to be zero. And you want to invest in stocks whereby over a historical period of time you want the stock increasing as opposed to decreasing. Now if you look at the line up here, which is a purple line, as well as the blue line here, it essentially maps the steady progression of the stock with the high being at $26 and the low being at $10.85. Now, other lines which you may or may not be able to see are two lines that are in orange and in purple. The orange line is a SMA 50-day moving average, which means it's a simple moving average. What finance professionals do is take the closing stock price for each day for the past 50 days and take an average, which gives you a little smoother line than what is shown in these patterns. Similarly, we take the SMA 200, which is essentially a simple moving average for 200 days, and you take the closing price for 200 days and take an average of that. What is the difference between the two? It essentially smooths out any bumps and or dips that you see in the simple moving average 50-day line, and narrows out essentially tells you what the stock is headed. So looking further at this graph, there's two theories at work that you may be learning in class right now. The line of best fit essentially goes from last May until May of 2014, then until November of 2014, which essentially shows a steady decline in the stock's performance, as well as you can say the linear regression over the past 6 months has been down. It hold true in the short run, whereas it might not hold true in the long run, just because the performance of a stock can vary significantly. However, in the short run, it's very directional. It's either up or down. In high school, I took Algebra 1, 2, Geometry, Pre-Calculus, and Calculus 1. In college, I took Calculus 2, Statistics 1, Statistics 2, and Operations Management.
Can you tell me a little bit what operations management is?
Sure. Operations management essentially works through a logistics of a company and looks at when the raw materials come in to when the raw materials go out. Sure. One of the biggest challenges that I had in order to get into the finance field was coming out of college and not having any relatives or individuals that I knew were in the finance field. So I had to rely heavily on my networking skills and my network that I had created throughout my college years and my internships in order to get a job. Not only get a job, but got a job that I wanted to get into and the field that I wanted to progress in long term.
So you mentioned networking in your response to the last question. So I just want to ask you, like, what exactly is networking? Why is it important? And in particular in the finance industry, like what's its role in helping students acquire jobs as well as finding fulfillment in their careers?
Sure. Networking, in a short answer, is connecting with individuals within the firm that are within the industry that are already doing jobs that you would like to do in the next, say, 2 or 3 years. In a broad sense of the term, networking essentially is getting to know people, their day-to-day tasks, their personalities, their skill set, and seeing how they match to you, and whether or not you'd be interested in doing their jobs and or improving their jobs. Networking also helps in terms of getting a job. Let's say, from my experience, I think 80 to 85% of the jobs that are out there have been filled through networks. Just because I'll give you two scenarios. Scenario A, you know person XYZ, and scenario B, where you don't know the person. If you know a person, you're more likely to hire them because you know their skill set and you know what they bring to the table, which also means that amending their skill set to fill the job will be a lot easier than going to the person that you do not know, that applied through an online portal. You bring them in, you do not know their skill sets, you do not know what they bring to the table, but you bring them in, you give them the job, and you have to teach them everything. You might have to teach them everything from scratch in order to make sure that they are able to do their job at a level that you would expect them to. I'd say mentors were tremendously helpful in getting me where I am today, just because they helped me get an understanding of what finance is all about. As I said earlier, finance has many different products and many different roles that you could do, but I wasn't sure exactly what I wanted to do until I met some of my mentors, spoke to them about their roles, spoke to them about the roles that they've done in the past, and get an understanding at a fundamental level of what each role entails and the parameters of the same. Mentors not only helped me understand finance, but they in certain situations helped me in my internships as well. They guided me through internships, and they taught me ways how to excel at them as well.
Can you just elaborate? What is an internship?
Internship is a 3 to 6 month period where you work in your area of study. So for myself, it was finance. I was on the bond trading floor for one of the investment banks that is on Wall Street, as well as I worked as a stock researcher for PNC Bank, which some of you might have heard of. So during my time at Northeast High School, I took classes at Drexel, Temple, and University of Pennsylvania. All of these courses were somewhat related to finance, accounting, and economics, because that was the area of study that I wanted to get into, but I just wasn't sure how to narrow it down. I took classes at each of these universities during my junior and senior year of high school, and all in all, I was able to gather 39 credits and transfer them into Drexel. It gave me an understanding of how college life worked and how to establish a balance between high school and college. I had the option of going to either Drexel, Temple, and the University of Pennsylvania. However, for funding reasons and for scholarship reasons, I decided to go to Drexel University. And it has the best co-op program, whereby you work 6 months and you study in your area of study for 6 months. Myself, when I was in 9th or 10th grade, would be to network with as many people as you can, reach out to individuals that are currently in those roles, and learn everything that you can about those roles and that person, because you want to make sure they're doing this job for a living, so their personality and their skill set matches that of your own. Second thing would be get active, do as many things as possible, because you never know when you'll meet somebody, where you'll meet somebody. You might learn a thing or two from them, as well as teach them a thing or two.
I just want to say, Mr. Kadakia, thanks for coming on the show. I learned some things about the financial industry, and I also learned some things about your own life that I didn't know. So, just want to give you a handshake. Thank you.
I appreciate being on the show. Thank you for your questions. They were great. They're informative. If there's any other questions that you might have, please send them through your teacher, and I'll do my best to get back to you as soon as possible.